Okay, mic check. Should be able to see and also hear and see a screen that is going berserk. I will get it situated here. Welcome. Mr. Blue here with TradePhantoms.com. And we are here for a 1-hour session here on YouTube to show you folks. We have some phantoms in here. Maybe we have some new folks, some followers, some people who are just trying to check things out, see what it's like. So this is a 1-hour show here on what a pre-market routine here at Phantoms would be like here with yours truly, Mr. Blue here, at least at a minimum. Hey, Jeannie, good morning. Hopefully y'all did well yesterday on Fed. As the retail public is calling for a stock market crash worse than 2008, SPYs and Qs up almost over 1%. So we'll talk about that, right? We talk a lot about traps and things like that. So let's just dive right in. So it's going to be more, futures and options. Oriented for right now for this session. Okay, so TradePhantoms.com, and I'm going to start out with futures. I'll go over some levels, some Globex traps, and we'll hit the charts and go at it, right? So I'll start this off as usual, real quick before I get into the charts. With Phantoms, supply demand is going to be the main backdrop of the foundation of what we do, and also starting with what's called a top-down approach, multiple time frame analysis, right? So I just bring this up usually every day just to get people consistently looking at this, building it into your subconscious. Point that I'm trying to make here: monthly, weekly, daily. I don't care if I'm trading on a very, very short-term time frame, or I could be all the way down on a 1-minute time frame, 2-minute time frame, but I'm still knowing where I am on the higher time frame, top-down approach, monthly, weekly, daily. I kind of color code things here: orange, yellow, blue for those time frames, so I know kind of what I'm looking at when I'm looking at levels or anything like demand, supply levels, etc. We have some candlesticks here. Okay, location being most important here. We got bullish candlesticks. Okay, context of demand and uptrends. Bearish candlesticks. Location being most important, context is market context of downtrends and supply. And then one of my favorite things on the planet, I'm a little bit more trained as a kind of like market maker style of trade. This is what we call at Phantoms the liquidity map. And so this is the guide here, to let you know what side to be on, okay? I don't care if it goes up, I don't care if it goes down. I honestly don't even care if it goes sideways, being an options trader as well. But the point that I'm trying to make here is that we focus mainly on getting on the right side of the market and ride, okay? So that's something that we talk a lot about when I have more time in here. But let's dive into the charts. All right, as we all should know, if you haven't been kind of sleeping under a rock, yesterday being Wednesday, we had the Fed announcement, right? So, we've been on track of this for the most part. I'm not going to go and rehash it, okay? We got business to handle today now that this is kind of the day after. And they came out and they cut 2 basis points, right? 0.5, 50 basis points, which is 2 of 0.25. 0.25 times 2 is 50 basis points. So they cut 50 basis points, right? So they cut that, right? We kind of been on track of that. All right, we've been mentioning that, and it wasn't rocket science really. The CME Fed Watch tool. Okay, we talked about that going into yesterday. There was like a 63% chance, or what have you, based on Fed Fund futures, that they were going to do that, right? And they did that, and right. So the market was kind of choppy yesterday, right? It really didn't move as much, at least for equities. It was up, it was down, it was up, it was down, it was up, it was down. All right, I'll talk a little bit about that as I go through the process here. But we did plan some of my phantoms in here that were already in that room yesterday. We went in detail. I'm hoping that y'all learned a lot from that detail. But we had levels. Okay, we had levels that we had planned out pre-Fed. And so we had like kind of, if y'all can see A down here, B down here, we have A up here, B up here. So we planned several trades or several levels to lean against in the event that the Fed really rock or move markets. And for my phantoms, y'all probably already know this right now because you see what happened yesterday. But I had this level up here. That's the only one that really triggered. I was hoping that the market came down more to trigger a lot more of these orders that I had planned and pretty much sized up on here. But the market just, everybody's calling for this market to crash, and it's like it couldn't even break yesterday's low. It couldn't even break yesterday's low. This little basic level right here, that's not even the greatest and freshest. So we couldn't even get here. I had levels. I was ready to go on these levels down in here and here. These are the notes from yesterday in futures, all right, and options, okay, and stock as well. This is SPY, by the way, just on a 60-minute time frame. All right, so these are the notes from yesterday. So I still have these levels on, but right now, pre-market quote right now in SPY is just, up here. So we have an outside gap. We talk about gaps a lot in detail at Phantoms, and this is what's called a pain gap. Okay, this is an extreme pain gap. What's called a mortgage gap. I have a whole special lesson on that with the group in here. But we have essentially there's a topping tail here. All right, red bar closed, red bar, red bar. Now we're in the context of an uptrend in a bull market. Okay, everybody's calling for this crash to happen in SPY, SPX all-time highs, right? Amongst other stocks as well. So the point that I'm trying to make is, anybody who tried to sell short yesterday and went to sleep last night thinking, yeah, this market's gonna crash and die, it's gonna go down, it's done, right? Look at what happened here today, just this morning. Okay, close here. Right now, pre-market quote, gapping up here, okay? So that is what's called that's an extreme pain gap. So anybody who's short is waking up this morning like, what is going on right now, right? So there you go, right? So, anyways, I digress. So I'm just excited that I'm just surprised, I should say, not excited. Well, I am excited because I got bullish swings across the board. I'm not short anything, but that's a pain gap, by the way, okay? PANW. Let's see. I gotta get to the actual process here too. Yeah, PANW is still in a macro uptrend here. Macro uptrend. And let's come into level here. Got yearly view up here. All right, so let me kind of start this off a bit more formally there. I'll start this off a bit more formally. I'll go over to Thinkorswim and we can map out our futures levels. Okay, but there's a lot of juicy gaps here today, so I do want to make sure that I'm just staying courteous to time here and going over some of these gaps here. All right, Meta, all-time highs. All right, long Tesla, Amazon. All right, let me start this off a bit more formally here. So I'm going to open up Thinkorswim here. Okay, this is Thinkorswim platform. All right, let me just put this over into, just real quick, starting this off here, the major 4 indexes. So I have the S&P futures, daily time frame across the board here. I'll switch to the darker background in a moment, but just to kind of give you the lay of the land of the major 4 indexes, I always kind of just start this off like this, okay? We have S&P futures, daily time frame across the board, up on the left, NASDAQ upper right, Dow Jones lower left, Russell 2000 bottom right. Let's see if Russell 2000 can actually get some segue and some legs here now that the official cut is actually in. Small caps typically benefit most from rate cuts as they are small companies that rely more on lending. Okay, so lower interest rates reduces their EBITDA, their balance sheets, because of the lower cost of lending. Okay, Apple really doesn't need a bank loan, right? To do business or to grow their business. They actually probably could operate as a bank, right? But a small little company like a small cap, okay, maybe a smaller company would need to rely on a bank loan to potentially grow their company, right? So that's the skinny on that real quick. There's more to it, but I'm not trying to do an econ class 101 here, okay? Smaller company needs more loans. Apple, Monster, really doesn't need a loan, right? At this stage in their business, right? I'll open this up here on the daily time frame. Oh, well, I could say this. S&P's up 1.5%. We got NASDAQ up 2% one day overnight. Let's go, right? Dow Jones 1.1, and then we got Russell 2000 taking the lead there at a 2.4% up on futures here right now. If I open this up real quick, all right, I'm gonna save some time here. Some of y'all in here are already Phantoms members. Good to see y'all, by the way. But y'all should not be surprised one bit that this market's made all-time highs, right? Here we are right here, right? So this is why we, I was always stressing about, hey, this supply levels here, but just be careful, okay? Because we're in a macro bull market, okay? So this market from 9/11, September 11th on Wednesday, that flip, that basically made everything line up for the bulls, okay? And by alignment, I mean your higher time frames, monthly, weekly, and daily lined up, okay? Lined up being above yearly VWAPs, above the 20 period moving average, the 200 period moving average. We have other VWAPs, volume weighted average price as well, VWAPs that we look at as well, okay? Fade VWAPs, all that kind of stuff, right? It's the too much time to go through that. It takes too much time to go through that right now. But long story short here, boom, all right, new highs here, right? NASDAQ, not quite just yet. NASDAQ is obviously all the way up here. All right, but one thing I'll say about this formation here, all right, remember these levels over here, they weren't the greatest levels in the world, right? I'm on a daily time frame. So, we had a pullback, okay? We had a pullback, S&Ps didn't have as fierce of a pullback coming out of here. But then, you can see right here, we rallied back up. We kind of based for the past couple of days on NASDAQ, okay? Just kind of waiting for the Fed. And then today, what's happening here is this bar is taking out this small range in here. So we're already on an outside day on NASDAQ, S&Ps, across all indexes across the board, okay? So this was a nice little basing. So typically when you have a basing, okay, that's healthy. And then if you have a base break, this supply here to the left, this is all not the greatest level of supply, right? We have a scoring processes that's too much to to cover right now, okay? But this is levels up here, yes, supply albeit, but they're not the greatest levels in the world. They're not the freshest, okay? They've been tested multiple times, okay? So NASDAQ does have some, but I will say the NASDAQ does have some overhead above it on NASDAQ futures, okay? If this one snaps, okay, we have levels up here, and this one's gonna be a little bit more, I would say, fresher or prime, I should say, which comes in at about 20,500. Okay, so if this continues to squeeze out, okay, if you go on the internet right now, all retail traders right now are like, this is gonna crash. It's 2007, 2008. Okay, so the thing about markets is you almost need people to not believe that we're in a bull market, right? Because you need people to short. Okay, and people who are short, they get short, and if the markets continue to rally, they need to buy to cover to get out. Okay, so today's going to be a day. I'm actually surprised it happened just in one day. Okay, I was expecting maybe options expiration, which is this Friday for the monthlies and quarterlies. Well, not quarterlies, but the monthlies. And futures rollover expiring the 20th. By the way, futures traders, make sure today's the 19th. Tomorrow is the contract expiration. So you better be in Z contract for futures on indexes, NASDAQ and S&Ps. But I'm surprised that they did this in one day. They meaning the big banks, institutions, not retail. Okay, if you look at retail traders, everybody's calling for a crash, right? So dumb money, right? That's what they call it, dumb money. I'm not calling anybody dumb, but that's a common phrase in trading and investing. Smart money versus dumb money. Who's the smart money? Big banks, institutions. Dumb money, retail traders on TikTok and Instagram and social media saying, giving you financial advice while they work at Wendy's and stuff like that, right? That's the joke, right? That's not my joke. That's a joke online. So, we'll see, right? So follow the price action, right? So anyways, there's a lot of shorts that are just going to wake up this morning not happy, okay? And that's pain for them. So eventually they have to buy to cover to exit, right? So that could fuel this market higher. Again, you need people to kind of not believe that we are in a bull market and they short the market, and then they actually become your profits as they are forced to buy to cover to exit on the wrong side, okay? As we are long, okay, selling to exit on highs, okay? Anyways, the point I'm trying to make here, which I think I already made, is learn how to trade professionally. S&P futures. Okay, darker background, switch over here. Okay, I got monthly on the left, weekly in the middle, daily on the right. Okay, monthly, weekly, daily. Okay, and I don't know about y'all, but if I just look at this monthly time frame here on the right, which is the biggest time frame, my favorite time frame on the planet. Okay, from a top-down approach, I don't know, and I don't know about y'all, but if I look over here on the monthly time frame on the left, I see a bullish trend, not a bearish trend. I don't know about y'all. All right. Right. So we have bullish, monthly, weekly, daily, up. So as I was mentioning over here. Once that September 11th happened, that market lined up. Okay, that market lined up. And we have a bunch of swings that we are bullish on right now as well that are going to be working out here. If this market continues, okay, to the upside regarding some stocks. Okay, Apple, I'm sorry, Amazon, Tesla, AVGO. I got a treat for y'all here this morning too. I'm looking at MSTR today. Okay, so I'll get to that in a moment. Okay, but yeah, we have markets up. Yeah, last week was on SPYs as well. SPYs. Okay, last week it gave us an inclination. Okay, because now this candle is going to be up here, all the way up here. Pre-market quotes are what 570s give or take on SPYs. Okay, so this candle is going to be a green candle here this morning when this open on the weekly, monthly, weekly, daily. But last week, okay, remember 2 weeks ago, give or take, I was talking about this weekly candle here. Okay, all right, a doji, and then if we were to break down below that, that is going to give us a little bit more of a breakdown in a correctional mode, right? It's just a little bit more of a smaller correction than we put in that little right shoulder right there. Wednesday happened, but the point I'm trying to make here is last week gave us a positive, what's called a positive COG, where the bulls are taking out the buyers are taking out the sellers right there. So last week, if you look at your monthlies and weeklies, okay, and weekly last week's close is a bullish candle. Okay, so people who are not looking at the higher time frames and trying to short just with a thought and opinion of thinking that this market's just going to be too high and is going to be similar to 2008. Okay, they're waking up in pain today. Okay, because they can't follow a simple basic trend line. Okay, and two candles, two colors, two colors, three lines, two colors. I have a phrase: 3 lines, 2 colors, no F's given. Right. So last week gave you inclination that is a bullish, a bullish candle coming into this week. Okay, and here we are, all-time highs. Okay, but if let's go back over to S&P futures. All right, that was the monthly, weekly, daily. I just gave you SPYs because it doesn't have all those lines on it, so you can see. But I'm going to drill down to the smaller time frames here. So I have the 60-minute time frame upper left, 30-minute bottom left, 5-minute in the middle here, and then the 2-minute time frame here on the right. And yeah, I'll just open up to 60. And long story short, first thing we want to do is map out our Globex high, Globex low. So as you can see, this is thinkorswim 1 hour time frame S&P futures, and the gray space is the overnight session. So future after the market closed yesterday, okay. And again, by the way, did not break any structure at all. Did not break any structure at all. Just one wick here, new high, selling distribution to exit, which is the thesis of what we had yesterday because there was no supply to the left, all-time high. So we were going off open interest and just logic of people who are long need to sell to exit equal to a new high, liquidity map. Okay, so we were on top of that yesterday. Okay, for the team. Okay, myself and the team. All right, this liquidity map that I referenced so dearly. All right, but today, that was yesterday. What's today now? So today we have Globex high here, Globex low here. Now we have all these levels here, Globex traps. All right, these are still planned. If I go over to the SPY and the SPX, just real quick, you can see these notes that we had lined up yesterday with the team and the group. All right, these levels are still going to hold true for my phantoms in here. But what I'm doing here is putting them side by side. So I got the SPY on the left here, and I got S&P futures on the right, okay? And see how I have, oh, I messed this up. This is supposed to be, did I move this by accident? There we go. I don't know I can't go, I'm a good trader, but I don't know my ABCs. All right. All right, there we go. So that itemized B lines up with that B there in SPY. I'm not going to go through this. This was a whole thing that we went through. This took hours yesterday, okay? Hours yesterday to go over some open interest, and I didn't even have enough time to go and to finish all my work on this. So I definitely don't have enough time to go through it here this morning, okay? But these levels here for Globex traps, I mean, they're not even Globex traps. Still just be common levels here. 5605 for 5605 for futures, okay? And down here, itemized A, lining up with SPY, is going to be, what do we say, 5566 down in here. Okay, so just looking at levels, okay, just looking at levels and lining that up with the S&P futures and 2 SPYs, okay, and SPX. But the thing about this is this is probably not going to be hitting today, right? I mean, this is probably not. We're not probably going to be hitting that. I never say I know exactly what's going to happen, but that's going to be very low probability that we're going to get down there. Okay. Therefore, the only thing that we can really lean against as far as a Globex trap, okay, because we have to wait for it to break Globex low, would be these little levels down in here that was once supply, now demand on the other side, but what was once all-time highs, now it broke. Okay, but to just make it short and sweet, we do have a couple of demand levels that were formed overnight that we could lean against in the event that we don't get a Globex trap lower down here. All right, and that's right here. If I look at current price, okay, and I look down and left, we do have what's called an impulse, a basing, and an impulse here. Okay, so we do have a level of demand that we could lean against here. right here. And again, this is S&P futures. Now, this is not a Globex trap, but this would just be a nice little demand zone that we can lean against. It's at or around VWAP, that white dash line here too. I get the rising 20, get the rising 50. So this also creates what's called a buy zone on top of what we call demand. Okay. So I got to go quick on this. I'm already looking at the time. It's 9:07. All right. So let me just get these numbers here for you. So we got 56, 56.38, call it. I'm just going to round. Okay, down to here, call it 57.24. Okay. All right in there. And there's also another level down in here. Now this one has some what we call confluence. Okay, that one has confluence. So again, 57.38. All right, and then if you want to reference this one down here as well, we have 57. Let me just drill down to the 30-minute time frame here real quick. There we go. Just refine that a little bit more. This is not the freshest one in the world here, but you can pin as well 57.07. Okay. All right, I'll just leave that there for now. I'm just looking at the time. I gotta go here, moving on. I'm gonna do NASDAQ very quick. All right, and I'm not even going to put out on the internet a short sell on this because, I'm just not. There's no supply to the left. All right. So just think about the people who tried to short yesterday, waking up today, just immediately wrong and in pain. And if you are on the internet right now and you're trolling, well, what if it did drop? Well, good. We know how to what's called a short sell, and I'd go down with it. I don't care if it goes up, down, or sideways. All right, I adapt. All right. But there's one simple chart called the. I digress. Let's see. Globex high, Globex low. Man, I just got to clean this up, man. This NASDAQ chart is just getting too ridiculous here. Okay, well, long story short here, got a couple levels. Now, this one has the most confluence here with the, I'm on a 60-minute time frame NASDAQ futures, by the way. 60-minute time frame NASDAQ futures, okay? All right, so we have right here, this VWAP level right here. This is a level that is confluence with VWAP, volume weighted average price in the buy zone. So that comes in at about, I'll just give you the front price here. Call it 19,880. Okay, 19,880. And this is going to be demand. Okay, demand down in here. Okay, 19,880. I'd drill down and refine down in here. All right, in here. So just draw another line in here. Okay, got some levels here. There you go. Now NASDAQ does have some supply up and to the left. I'll say that, but just be careful with that. All right. NASDAQ does have some supply up and to the left. So I would suggest to drill down. Now this is probably going to squeeze some more people out here. So we could have a liquidity sweep. So I'd feel safer to say, especially for online for free, because I don't know, with Phantoms members, I know that they're trained, right? So I can speak a little differently, but I'd feel more comfortable for free online here, YouTube stream here. I would probably, for a Globex trap short, I'd want this to liquidity sweep up and get up into the 20,350 area. Okay, so I would suggest to write that down, 20,350. Okay, I gotta move on because I got less than 20 minutes. I wanna go over some gaps, okay, another pre-market routine here, okay? But that's kind of where you would be at, okay, coming up into some other fresher level that has not been tested yet from supply. So there's a lot of shorts, anybody who's short, if this level gives out, they have stop losses right here, right? So stop losses are a buy to cover order, and if they're wrong, that could fuel this pump up into the next level on NASDAQ. Just classic what's called liquidity, all right? Knowing the four, two actions, buys and sells, but the four possibilities, okay? Buy to enter dips, sell to exit rallies, sell short to enter rallies, buy to cover those dips. What I'm seeing right now in the chart too, just on S&P futures, is for you Phantoms members that are a bit more trained up, we just did have a nice positive COG here. I don't know if anybody took this, but we just had a nice bar right here. Just got put in positive COG back above the rising 20 period moving average right there. Okay, for a scalp, if you know, you know. If you know, you know. All right. By the way. All right. But I gotta move on, unfortunately. Typically, in a live trade room, our real live trade room, you know, we'd go a little bit more in discussion with this. But for you Phantoms that know, a little something here that you can lean against here with this positive COG on the small time frames here. All right. But we could come down a little bit after markets open, so just be patient. All right. That being said, let's transition a bit here over into said, you know, stock options market. One of the things that we want to check is the VIX, volatility index. Okay, let me show you some pre-market quotes on. And by the way, this rally up here, right? You know, this is all the sectors over here on the right. I might not be able to see. Let me see if I can zoom in a little bit here. Jeannie Lee. It's a little. I noticed it's a little glossy today. A little. It's a little annoying here with the visuals this morning. Why is it so glossy? All right, I gotta move on though. Let's see. So the point that I'm trying to make, all the sectors right now are green. Okay, so this is not just about a FANG moving up. This is a market depth. Okay, this is market breadth here where everything's up. Okay, so everybody's participating in this rally. everybody's singing kumbaya on this rally right now. Okay, it's not just, you know, sometimes you'll get something like just FANG stocks, just the Magnificent Seven pushing market up, right, and vice versa. Okay, or all right, so everybody's partying right now. All the bear, no matter what. Okay, everybody. This is all participation in short. Okay, which by the way, I was giving people the insight on that when I spoke about the SPX equally weighted. Okay, I'm gonna write this down. Okay, SPX EW. All right, this is SPX equally weighted, so they equally weighting all 500 stocks equally, not just Magnificent Seven, which is more weight into the S&P due to market capitalization. Okay, this made, you know, this was already making all-time highs when FANG stocks were pulling back. So this was telling us, okay, that this market was healthy in terms of it no longer had to lean against FANG. It was taking care of itself, and now FANG is taking. Now FANG is now joining the party as well. So I had mentioned that if this market, if FANG meaning the Magnificent Seven, Apple, Google, Tesla, Nvidia, right, Microsoft, Amazon, right. I had mentioned if the Magnificent Seven starts to participate more and catches some more bids off after it's a little bit more of a sell-off, okay, or a pullback, this market's gonna fly, okay, because we have now everybody's in on it, right? In terms of stock, not people, just the stocks itself, okay. Anyways, I digress. VIX down, market up. VIX up, market down. So you can see this morning VIX is down 10%. So VIX is collapsing. So again, VIX down, market up. Okay, VIX up, market down. All right, so we have a VIX volatility collapse here today, this morning. All right, so there's VIX here on a daily time frame. We look at this on a longer term picture as well. I don't even have enough time to explain that at the moment. All right, but the VIX is the volatility index, okay? 30-day implied volatility of SPX options. To keep it short and sweet, fair greed gauge. Okay, there's more to it, but we map that out on the higher time frames and know where we are on the bigger picture. And we also map this out on the smaller time frame as well. So here I am on a, you know, intraday kind of 2-minute time frame here of VIX. I just map out the overnight high, overnight low, just as reference points, right? And again, if VIX rallies up, markets would typically be dropping in most cases, all right? I just kind of pin the kind of high or up here in the middle here, and then I pin, you know, the low, so I can see how VIX is kind of trending throughout the day. Okay, so VIX is continuing to fade down, so VIX gap down and is fading and trending down. So if that remains true or the same or consistent with that, that was going to let me know that the bulls are still going to be out to play and potentially party. Okay, SPY real quick. We already talked a little bit about this. SPY. All right, I did pull this up just really quickly. All right, here's our notes from yesterday. I'm on a daily time frame. Let me see if I can stop moving this, make this a little bit more visible here. Trying to zoom in the best I can. All right. There we go. So Pre-market quote 570.73. So SPY is going to be gapping up here. So again, this is a pain gap. Okay, in all fairness, we have a topping tail here. Topping tail, red bar close. Okay, but again, could not break any structure. Closed yesterday here, and then gapping up here today in sub 12 minutes, give or take. Okay. I forgot to do gold. Yeah, gold is also a monster right now as well. Silver is of interest as well. Silver, so this is gold monthly, weekly, daily. Okay, kind of broke out. We pulled back, we tested this daily breakout here, and then on gold, we had levels, actually, we had levels mapped out here yesterday. Therefore, so 20, we already had this here, 25.81, that hit nicely right in there, rallied up. All right, so Globex high, Globex low. For the Globex trap, right here we have Globex, where's the Globex low today? Is Globex low here? Is it Globex high? Gold was busy overnight. Yeah, we have a decent little demand zones in gold here. Decent. For the Globex trap, you probably would have to come down here. I'm not sure if that's going to hit today, but that would be the Globex trap, 25.58. You could lean against this area here. It's not the greatest level in the world because it already got tested. This is the level here, all right? It formed over here, right? And it tested right here. That's what we're rallying off of right here now. Off of that, so that level worked out pretty nicely there. So the long story short here, 25.80s. Okay, we can lean against that. It's not a Globex trap. Globex trap would probably be down here, 25.58s. Okay, but we can lean against the 25.80 on this but it's not prime. Okay, so you have to put that into account there. Right now, this level that it's on, it's kind of basing right now. It's on VWAP. It's on its average. We're in the middle though, so just be careful with this level, because we're in the middle of range. So there's always a little challenging here. So gold is in a very slow kind of grindy uptrend. Right, it's not really a fast moving, but it's been nice and smooth, right? It's been nice and smooth. But I know you're looking at this and you're like, do you think gold's gonna fly up today? It could just wait. The way gold trades, okay, is like it's kind of fairly slow, right? It's fast, right? Because of the leverage and the prices that it moves. But like overall, okay, it can come and fade and pick up some more buyers. Just remember, I'm saying too much words here. Remember over here where we had like this long base. It just took forever. But once it goes, it does go. Okay. So the condition is, let it come to. You don't want to be getting, this would be an aggressive level here. I do like it how it's on VWAP, but VWAP is giving me the average volume weighted average price, and that's what we're on right now. So you might want to be waiting for maybe something like down here for a little bit more of an extreme. Okay. Good job though. Good identification. All right. SPY gap up here. Okay. That's a pain gap. Pain. Bears are waking up today. Bears traders are waking up today just in straight up pain. Qs. Same thing. Okay. Close here, daily time frame of Qs. Okay, and by the way, folks, we talked about this not too long ago. I even gave it on YouTube. Okay, I have the structure kind of illustrated up here. I'm not going to spend too much time on this. All right, right now, but we were talking about this, right? So I kind of drew it equally over here. Here's the segments, and here we are, right? So we talked about this level, that circle being that circle right there, and then we're rallying out. So we're kind of like right here now, right? In Nasdaq. All right, now S&Ps are already having a new high. Right, S&Ps already did this, and S&Ps are already up here. Okay, or up here. Let me move. There we go. I might be able to see that better. Man, I gotta screen share. This is bullshit. So S&Ps are already up here, relatively speaking, right? So, but Nasdaq is still, I would say, this is about right here. So if this snaps, as mentioned, okay, Nasdaq could be going on a joyride and joining the party too. Just relatively, picking up the relative, you can pick it up as it's relatively more weaker, just at least for right now. Okay, at least for right now. Typically Nasdaq is more stronger. All right, but FANG took a little bit of a break. Tech. All right, so anyways, there you go. There you are there. All right, so we are now in NASDAQ, though, however, I will say we are gapping up into this level. All right, so NASDAQ is gapping up into this level up here. So this is last month's high. So we have not cleared that yet. So it's not like the S&Ps were cleared that, is what I'm trying to say. Okay, now, so just be careful with, in this gap up into here. Typically, like SPYs don't have any level because they're all at all-time highs. So, this is not the, again, we've been tested this level. This is the level here, then we tested it here. So this would be kind of like the second time test here, okay? I would look out for a potential liquidity sweep. If I was looking to short this, okay, I'd be careful with that first and foremost. I want to be careful with my words here, but I would be looking for what's called a liquidity sweep above here, okay? Taking out, gap up, potentially rallying up into this area here, okay? Stop these shorts out, because people who have shorts, okay, have to buy the cover, and then people, and then those buy the covers could be some exit distribution for longs, and then also sell short to enters could come in, and basically in short, I'm saying, you ever had a level where you got stopped out, right, and then the market mean reverted, right? So up here in QQQs, this could be what's called a liquidity sweep up here, and that's anything essentially above last month's high, which is 485.65, give or take, okay? But typically what you want to do is look at a level right above that to see if you have a level of supply to lean against. All right, I want to be careful with this one here, but let's see, right? So this could be a nice little Globex trap here, because this is the supply zone right above those monthly highs, and we also have some right. So that comes in at about, write this down, 487.44, 487.44, 487.44. I would not be surprised if this market came up liquidity sweeped. And if I was to or were to short, I would want to short where people have put an entry where people have their stop losses, okay? So that 487.44 is going to be a trap level for liquidity, all right? Just for a potential mean reversion, 487.44. All right, now we're gapping up here. Okay, so we are entering supply, so I'll let this squeeze out a bit more, squeeze out a bit, okay? And then this would be, if you're long, I would definitely start to take profit, right, at last month's highs in here. And then potentially, if you wanted to take a day trade, this would be a nice little liquidity sweep short there for futures and Qs. All right, liquidity sweep short. And basically, you might be saying, well, hey, Mr. Blue, well, isn't that a breakout where we could have, right? Isn't that a good thing? Why are you going to short, right? Well, we're getting like a little stretch here, right? And then people who are now trying to buy the breakout here, where are you? Why aren't you? You're late now, right? So again, just liquidity, right? I wouldn't be surprised if we liquidity sweep first, come back, neutralize a little bit here, options expiration, and then maybe go. Right, so I need a little more time on that. I got 5 minutes. All right, so that would be the area there. Okay, 487. Okay, if I'm long on this, TP up, take profit. Okay, distribute, and then this would be a sell short to enter for a mean reversion on liquidity sweeps. Okay, 487.44. Apple, outside gap up, just like anything here. Yesterday's high, yesterday's low, daily time frame. Outside gap up, nuts clearing. Right, Amazon. I'm long Amazon here. If this 190.50 gets taken out, it could be interesting here. All right, some of my phantoms are like, oh man, Amazon, it's not really, it's just been basing. No big deal. It hasn't broken any structure. Pre-market quote is up here right now. So, if this market does continue to potentially rally, if Amazon snaps this level, we could have a bit of a squeeze happening here, right? A squeeze happening here, and I'm long that on the swing trades. Google, so everything's gonna be for the most part gapping up here this morning. So we have to qualify these gaps. Google. Gap up here, okay? So everything's just gapping up for the most part, all right? And typically I'd say be careful with that, but the way that the market ended yesterday and the way that the retail public, their sentiment is extremely bearish. So typically when the public is leaning, is the public naturally always wrong, typically always wrong or right? Okay, when the public is extreme on one side, okay, that's typically where markets will fade them out, okay? So even if there were to be let's say there was to be a crash coming, it wouldn't happen when retail public would know when it's gonna happen. When it happens, right? So they're always late and wrong, okay? So going to sleep last night, as I'm just, doing my nighttime routine, I'm looking at the internet and everybody's calling for World War III and 2007, 2008 crash. I'm like, this market's going up tomorrow. And then I wake up this morning like, whoo, classic, right? Classic. Right? So Tesla, Tesla is not really participating very strongly right now with this. I'm long Tesla on a swing trade here. Okay. Now Tesla kind of does its own thing, right? It's either leading, okay, or it's lagging. So Tesla always is kind of doing its own thing, okay? But there is what's called a squeeze setting up really nice on Tesla, okay? So if we start to snap and break above here, okay, I got some swing trades. I'm kind of loaded up on this, where I'm basically swing long here, and I'm targeting at least this area here just to keep it short and sweet with 2 minutes before the market opens here, okay? I'm going to try to see if we can get up here too at 280 here. So I've been working on this trade for quite some time now. This is a swing, right? I'm all the way out into like January. What am I in January contracts for expiration? December, January-ish. Okay, so I'm giving that a couple of months there because this is not just a day trade. This is a swing trade. Okay, we just have not popped out of this mother bar, red bar here. But if this gets taken out and shorts are forced to cover anybody who's short, okay, if this works out, I could be wrong, right? I could be wrong first and foremost. But if this gets taken out, okay, we could have a squeeze, okay, and it's officially squeezing, and it's getting squeezed harder, okay, so that's going to be pretty interesting to see. AVGO, some of my phantoms are going to be mad at me. Yesterday I did sneak in and pick up some more AVGO calls. I'm long AVGO already from like down here, so I'm still just riding this swing trade, okay? But outside gap up, pretty decent today. AVGO is one of my favorite stocks. Meta was cooking up. I had given to the group that the 550 strike calls were heating up. Okay, that Meta was probably going to be popping here. And the irony is, where pre-market quote is literally 550 here today. Okay, outside gap on that. Microsoft finally participating here. Microsoft. It's just been annoying with Microsoft because we've been gapping up and doing very well with it here, but the only thing is it's gapping up into some levels here, so it's been kind of normal. Yeah, you can keep that on one too. I missed quality transportation question there. It went away, so if you can redo that, I can maybe get to that. Microsoft, nice pain gap up, yes, albeit, but we do have a level up here, so I'll just be a little bit careful with that one here. All right, on Microsoft. But I would want this level to get taken out here. But we'll see. Microsoft might be a, just be careful with Microsoft here, coming up into this gap fill right there. I'll leave that there right now just with the sake of time because this market is about to open right now. NVIDIA, AMD had one that I liked here. Outside gap up on 2 days here on AMD. AMD actually has a better gap than NVIDIA here this morning. What was that ding? The dinner bell. Time to eat. Let's see. Market just opened. All right, be patient. Let me just get some. Let me get some internals just really quickly. Just get a foot of the market here. So we got VIX. I got the vol cumulative tick. Just want to get advanced declines here real quick. All right, gap up. You can see that there. All right, advanced declines extreme up 2,000. That's extreme. Vol D buy volume is holy smokes extreme. Okay, VIX is pumped new lows. All right, and pain gap, right? So I said AMD NVIDIA just heard me say that AMD has a better gap than it, and it took that personally, and it's the strongest out the gate there. All right, be patient. Big gaps here, so it could fill a bit of the portion of the gap. Let me see Tesla. Apple. All right, NVDA ticker. IOF is going to also be on the list there. So the gaps, big gap up here. A lot of things, so just be careful. We can fill a little bit portion of the gap there first before we rip up. Potentially, could be a down day today. You never know. NVIDIA's calling me a little bit here. Microsoft wanted to watch Microsoft be like the outlier up today, even though we have supply up there at the left. So AMD had better gap than NVIDIA, but AMD is not following through as well here. All right, right now it's still very early, but NVIDIA, NVIDIA. The irony is it's not even clearing like yesterday's high. AMD CEO talked last night. Cool. Did he tell good stories? Did he tell good stories? AMD CEO was on CNBC last night. Was he telling good stories? VIX might fill its gap from opening to AM, more bearish today. That's a bit too far for ES, but we will see what happens. You say it's bearish? VIX is just a gauge on that. So let me see. Just want to be a little bit patient here off the open. Apple is relentless. Apple's good. Apple's clearing. We're gonna go Apple here. Apple long call. NVIDIA setting up. Just because you have a gap fill doesn't mean that it's going to fill. That's what you think it's going to do, but what if it doesn't, right? And even if it did, you know, it could happen. But let me see. So I'll call Apple 227.5 strike call. They're going for about a buck, you know, $1.20, $1.18 here. All right, so I'll start this off here with Apple long call. All right, picking some Apple 227.5. I just bought these for 1.17 per contract. Apple on call. Just make a notation of that. All right, one of the things somebody was saying about the VIX gap, one of the things that you got to try not to do as a professional trader, all right, and I know it's difficult sometimes, is tell a story in your head. And right, it's going to do this, it's going to do that, it's going to do this, it's going to do that. So when you say it's going to fill the gap today, and that's going to be bearish for SPYs today, right? You have to be careful with that, because what if it doesn't? And right, so be adaptive, and you know, have it there on your radar, but trade the tape. In short. All right, long call Apple. Seeing the video, is it trying to set up here? It's trying. Let's see. All right, not yet. Off open. All right, long call Apple. Everything's kind of gapping up, fading just a little bit, which is a little bit expected there after that big move up, or the big gap up. So just gotta be a little bit patient. We could flush out just a little bit. All right, Tesla's interesting here. All right, if Tesla can take out its this red bar here, close above this positive COG, changing of the guard here, that could be a setup. Day trade long. All right. So a little bit of a push down. There we go, NVIDIA. Trying to do something here. All right, Apple's already popping new highs here. You can either take some profit on this, 227.5, TP of Apple. TP means take profit. All right, from 117s to 143, just got some off there, sold some. Hold on, I'll put the chart up, but NVIDIA is giving us that setup. NVIDIA long call, hit it. NVIDIA long call, hit it. Long call day trade. Tomorrow's expiration, just a day trade. Pick up the 119s for 128. 119 strike, going for about $1.28 here. Long call NVIDIA. Rejected. Long call NVIDIA here, 140. Got 140. I got filled 142. And yeah, long call NVIDIA. Day trade. All right, long call NVIDIA to Tesla pop. Tesla, long call, day trade. Did somebody say bearish? Oh my God. You can pick up the 240. The 240. Strike, long call. Yes, there you go. Yes, you're correct. In fact, that's actually most important. Right? There's a lot of levels on the screen. There's a lot of levels on the chart, but you have to identify the proper levels. And one of the main common issues with most folks and traders is, or people who are trying to learn how to trade or trying to develop into a trader, is the lack of understanding the higher time frame. So a good analogy I like to give here, for the sake of time here, as I'm getting long Tesla long call here, got filled at 214 here on the 240 strike. The analogy that I like to give is, there's a lot of you want to buy a house, right? You're on the market for buying a house, and there's a lot of houses for sale, right, out there in the world or out there wherever you are, and but you have a certain location that you're in that you want to be in or around, right? So there's a lot of levels on the chart, but where's the location of those levels, right? There's a lot of houses for sale, and you want to buy a house, but you don't want to buy a house in a bad neighborhood because you got some kids, right? Right? So you want a good school district, right? So it's like, oh man, the house looks good, oh, the level looks good, but look at that location, Now, the schools are like the worst in the state, So that might not be the best neighborhood to buy that house. That might not be the best level to buy that level, okay, in demand, for example. All right. So location. All right, Apple's ripping. AMD, NVIDIA ripping. I want to get long call AMD as well. I'll pick up the 155 for 176-ish here. AMD long call. All right, let's take some. I got filled at 177 on these. Let's take some profit on some of the others here. NVIDIA just ripped. Let's TP some here, take profit on some NVIDIA here. Nice little rip off the open. All right, TP some NVIDIA from 142 to 175 here. What bias? Not sure what you mean. What do you mean by bias? All right, take a profit on NVIDIA 142 to 172 here. Just sold some off of these long calls. Let me get some Apple too. All right, Apple, TP some Apple. All right, going for about 147 here. This is the second TP on Apple. All right, Apple 144, got some off there. Diego's question was regarding the supply demand, right, on higher time frames, or demand supply. The factor being a big factor is going to be the location of the monthly and weekly daily. Am I on the right track there? All right, TP'd Apple twice here. All right, still in. Of course, NVIDIA. All right, got some TP up here in the video. I don't know if you're a phantom or not, but I got 1 minute. I want to answer everybody's question here, but if you want to learn more, come to tonight's class with Mr. Black and Mr. Green hosting that. I'll show you that in a moment, and then you can learn more about that. All right, TP, NVIDIA, let me see, Tessie looking good, Apple, Meta. I want to be a little careful. I don't want to be exit distribution on Meta. My question about bias was in regards to strong trend. If a chart is on an uptrend on the higher time frames, then supply on a 4-hour or daily don't really mean much. Correctamente, or it would be less reliable. Yes, sir, you got it. The hierarchy, right? There's a hierarchy, right? Top of the food chain type analogy, right? So you got it, right? So for example, like let's say we have a strong monthly. You know what? I'll give you live here. Let's say we have a here, I'll just use SPX as an example. Okay, strong monthly, weekly, even daily uptrend here, right? Strong monthly, weekly, daily, right? And then it's a macro uptrend, but you have like a 60-minute supply zone here, like in the middle, right, of the location of the monthly, weekly, and it's in an uptrend, right? So that 4-hour smaller or 1-hour time frame, small 4-hour time frame of supply in the context of a macro picture bull uptrend is typically going to get just destroyed. Okay, typically with the market monthly, weekly, daily, coming up. So alignment is extremely important. So yes, the hierarchy. That's why if I have a macro picture uptrend and and I have a level of supply that is on that's only visible on say the 60-minute time frame, right? The probability of that 60-minute supply zone working out is going to be extremely low probability because of the current, if you will, the major current monthly, weekly, daily. Okay. All right. So unfortunately, that's my time right now. AMZ, uptrend, weekly, monthly, AMZ. All right. I gotta go. I can't even get AMZ here on the monthlies and weeklies. I don't know why. That's kind of weird here. Monthly, weekly, daily. Yeah, so we have like this supply here. So this would need to be absorbed. So that's what's happening right now. This daily supply level would need to be absorbed. Monthly, weekly, daily is up. Last week close was a decent little bit of a bullish engulfing here, but this needs to be absorbed. So it'll be a little bit of a fight. okay? But longer term, that could, a month, if I'm looking at the monthly and the weekly, you have a hammer bar on the monthly, okay? Weeklies engulfing bar, and then if this daily level of supply gets taken out, which if it gets absorbed, we could pop, and this would be alignment, okay? So, there's something here, right? There's something here, all right? Longs, could be taking some profit, I'm sure there's probably some shorts coming in here too, all right? And this is probably dragging us down, so taking profit from longs, shorts kind of entering in, even if this kind of dropped down here into this demand zone, this could base, okay? That's the thing, so it takes time sometimes to absorb, right? Because we do have the supply zone here, it might take some time to absorb where the buyers and sellers, the weeklies and the dailies might go in a little bit of a range here, okay? And then this would be low range, this would be quote unquote high range if it does do that, but I'd be more leaning against the low range entries down in here, even if it's not the greatest level in the world, because the monthly, weekly, daily is up. Okay, so I'm more of a buyer of demand into pullbacks and low down in here on the low range because of the monthly and the weekly telling me that, right? So this has something. It's like a speed bump right here, right? A little bit of a pit stop as an analogy. This drop, this basing, this drop, all right? And then we're here right now. Makes sense? All right, I gotta go, folks. Y'all are sucking me in, and MSTR, I'll talk to y'all in chat about that. I gotta go. I'm already over my time here on YouTube. All right, I gotta go. I got stuff to handle here. All right, I hope this helped. All right, if in the live trade room, I go all day, baby. We were going like all day yesterday, so this is YouTube, so I got shit to do. I got stuff to do. So if you want to learn more about that, right, and pick up your bootstraps, go to TradePhantoms.com, right? Click that register button there. All right, and tonight is the night, September 19th, Thursday, 7 p.m. Eastern tonight, 9 hours away. Put your name, email in there, right? Hit register, get sent the link, all that good stuff. All right, Mr. Black or Mr. Green is going to host a 90-day, I would say 90-day options trading, 90-minute, give or take, workshop on, how markets really work. We're going to lay down top down, what Phantoms is all about, how markets work from a professional standpoint. Okay, all assets, stocks, futures, forex, options. Okay, all types of trading, day trading, all the way to long-term investing management. Okay. All right, so hit go there. That's where you start. Okay. I'm not much of a social media guy, so I'm a real trader. I got stuff to manage here, okay? I know y'all got questions, but there's a time and place for everything right now. And right now, I can't go into detail with all that, right? I answered all that questions there, but that's it for right now. And yeah, TP some Tesla. All right. I'll look at some MSTR for the group for minority Phantoms members. I will get you in the group there, and I'll talk a little bit about MSTR regarding a trade, right? But I got to do I got to dot my I's and cross my T's regarding that right now. All right, Tesla did pop new high. All right, Apple at new high. All right, Tesla popped new high. NVIDIA pulled back a bit, and AMD pulled back a bit. All right, folks, I gotta go. I'll see some of y'all later today for my Phantoms in the Thunder Thursdays in class. And if you're fairly new, could potentially go to that class this evening at 7 p.m. Eastern. All right, folks, God bless. Take care. Trade safe. Blue out.